Hello and welcome to Monday Product Update. Today we're going to cover what is a VA loan. A VA mortgage loan is designed for a veteran that has served at least 24 months in the armed forces. They can be on active duty, they can be retired, or they can be National Guard and reserves. So I'm going to go through my notes on a few characteristics. There is a 0% down payment when the veteran has a $36,000 entitlement in their certificate of eligibility. This $36,000 usually covers up to a $700,000 purchase price with 0% down payment. Anything higher than $700,000 may require a down payment. There is a minimum credit score of 580. And a VA loan normally will have lower interest rates compared to an FHA, conventional, or jumbo loan. And the nice thing also is that you can have up to 4% seller contribution towards the buyers, towards the veterans, closing costs or discount points, and sometimes you can even pay off credit card debt with these seller contributions. So that's a nice tip to know. The 4% is calculated based on the property value, so 4% seller contributions max. And there are no county limits. So as you know, FHA, conventional, they have county limits. VA office doesn't have any county limits. And some other points to consider are that VA doesn't allow co-signers. So if you have a veteran, the only other person that can be on the loan is their spouse if they're not a veteran, or another veteran needs to be on the loan if you need more income. And there are also allowable and non-allowable fees. So this means the fees that the veteran can pay or cannot pay for. So some fees that can be charged to the veteran are appraisals, county recording, prepays, which includes your insurance, county taxes, and daily interest towards closing, credit report fees, surveys, flood zone determination fees, the VA funding fee, and a lender, bank can charge up to 1% origination fee to cover their costs. So processing, document preparation, and the writing fees would all be within that 1%. And some fees that a veteran cannot pay are attorney fees, real estate commissions, real estate broker fees, any additional appraisals that are required, escrow settlement fees, and rate lock fees. This is just done so the veterans are not being overcharged for a loan. And something else to note is that a veteran can have more than one VA loan. So when they are ready to relocate or are ready to upgrade to a new primary residence, we as the lender do a calculation based on their entitlement to see whether or not they will need a down payment for their next VA loan. And veterans don't have mortgage insurance, but they do have the VA funding fee. The funding fee is determined on two main factors: whether the veteran is disabled or not disabled. Disabled veterans are exempt from the funding fee, and any other veterans must pay one. The funding fees are based on down payment categories. So if our veteran wants to come in with a 0% down payment, they have to pay a 2.3% funding fee of the loan amount. If they put a 5% down payment, they have to pay a 1.65%. And the higher down payment of 10% gives them a 1.4%. So all these percentages help them on their monthly payment. And there is a chart that I can send you guys if you need to see the breakdown of that. And also, student loans are calculated on VA loans. So any student loans that are in deferment for our veterans must have a monthly payment. So we'll go a calculation, add up all of the balances and calculate that to add it as debt. Something else to note is that the veteran must have residual income. So for example, if a veteran has enough income to qualify for the home, we also need to calculate how much left over after paying the mortgage they have in order to cover expenses like childcare, utilities, and also how much is being taken out in their taxes. So there's a lot of work to be done on that, and we take care of that for you. So the movement mortgage difference is that here at Movement Mortgage, we don't charge any origination fee, processing, underwriting, or document preparation. So our veterans don't have to pay for any of that. And we can also finance condos for our veterans. There is a VA approved list that we can easily finance, and it's very smooth process. But if our veteran is interested in buying a condo that is not in the list, we can work with the HOA to get them approved. There is a few more things that I wanted to mention as far as assumable loans and renovation loans. We can help you go through that process with your veterans as well. If you have any questions or would like a full list of the allowables and no allowables, the funding chart fees, or maybe it's just some marketing flyers, get more information so you're well informed of how to put together those contracts to benefit your buyer and get those offers accepted, let us know. We'll see you next Monday.